Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at MarketSite is Jordan Stuart. He's the Client Portfolio Manager over at Federated Investors, and we're going to focus on market headwinds as the markets are sitting at just about all-time highs. Jordan, thank you very much for joining us at MarketSite. Let's talk about this. What is driving the strength in the equity market? It seems to be pretty unstoppable the past couple of weeks.
You know, Jill, we're going through a period of acceleration of earnings. Profits have accelerated for about a year and a half now, where we went through a lull from 2013 to 2016 of no earnings growth. Market multiples propped up the market, and now we've seen a combination of tax reform, CapEx spend is increasing investment by companies, and you're seeing confidence from consumers and businesses investing, which is causing an acceleration of sales, which is turning into profits. I think that's a healthy environment for earnings to be driving this market, because that's going to bring down PEs, the market multiple, and we see that earnings continuing to accelerate for the back half of the year, probably into next year as well.
All right, so those are the market headwinds that you see right now. Now, what are some of the risks to this thesis?
Yes, look, some of the risks are a good problem to have, right? You have rising wages, rising prices, even interest rates are going a little bit higher. What we're focused on is where companies can mitigate some of those risks. What are they investing in? And we're seeing technology being invested in, productivity, automation, that can offset some of those rising wages or prices and can turn a bad thing into a good thing.
All right, now let's talk about the beneficiaries of capital investment increases that you had mentioned from tax reform and GDP acceleration. What sectors of the economy are going to benefit from this?
Sure. When you think about where companies are investing, we're hearing investments are picking up in energy. You're hearing materials, industrials are all investing back in the United States. To our surprise, 30 to 40% of that investment is going into technology, into software, and efficiencies. Again, if wages are rising significantly, how do you mitigate some of that? You're going to invest in software, make your employees more efficient, increase profitability, streamline your process, inventory, bring down your costs as much as you can by investing in technology, R&D, and those areas that will get significant returns on investment over time.
All right, and to wrap it up, what's funding new growth companies?
Yeah, right here, IPOs.
Yes.
You're seeing significant IPOs. IPOs have picked up significantly. First quarter, 44 IPOs in the U.S., 60 IPOs in the U.S., in the second quarter, and we're on track to do about 50 IPOs this year, which is good because I think there's demand for new ideas, growth ideas, that innovation, and as the debt markets get a little bit more expensive, the public markets are open and they're funding these ideas, and you're seeing it right here. You're going to see it this week and next, I'm sure.
Yes, very happy to list new companies on Nasdaq. Right. Well, thank you very much, Jordan, for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.